Hey everyone, welcome to the KE Report and a daily editorial on Wednesday, May 28th, chatting with Jordan Roy-Byrne. Jordan is the editor of the Daily Gold. We're going to look at the charts for gold, silver, and also discuss what's going on the action in the underlying equities, gold and silver stocks. Jordan, let's get right into the charts with the gold chart. Gold, as we're recording this, trading in a way kind of in the middle of its range that it's been in for about 2 months now. Price wise, gold is about 3,300, right on the dot. And again, that's off of its high of around 3,500 about a month ago, and its low of about 31, just over 3,100. So, Jordan, choppy action in the gold market, but still, this is a high level the gold's trading at. What are you seeing in the charts? What should we be paying attention to?
Well, in the short term here, I don't know if there's anything that urgent to pay attention to. Gold clearly made a peak in the second half of April, and so far it looks to be, I would say a bullish consolidation. Maybe, I mean, I wouldn't say it's bull flagging just because if you look at the move up in April, gold has retraced a good portion of that. Although if I'm stepping back and looking on a bigger time frame, maybe it's consolidating like a flag. But I looking at it, it needs more time, but I think a bullish consolidation is one possibility. Looking at the daily chart of the price action, put in a good bottom there below 3,200, but selling has knocked it back down as it rallied up and got close to 3,400. So you factor in that price action and considering how overbought it was when it peaked in April, I see it continuing to consolidate here. Maybe it'll evolve into a bullish consolidation. I don't see a lot of risk that it's going to push up here and make a new high anytime soon. But I mean, with that being said, it's interesting how the miners have been performing and also select stocks. So that's been the bigger story, I think, during this gold correction.
Well, maybe we can dig into that a little bit more. I mean, Jordan, you know how it is. People always want to know where could gold go next and is it going to go higher? But even if it just got stuck in this trading range for a while and digested this move that it's had over the last year and a half, what does that mean for some of the gold equities as far as the catch-up trade?
Yeah, I think we talked about it a month or two ago where I was thinking we could be coming into an interesting point that we've seen in other cyclical bull markets in gold, where after the first rebound or the first leg higher, the first wave higher, you there is a point when gold corrects, and during that correction, more money is still coming into the sector, and it tends to go into the stocks and in some cases silver. And so we've seen that quite a bit in the last month, at least select stocks, the high quality juniors, as I like to say, money has been flowing into those, and we've seen some of them actually make new highs, even as gold has been consolidating here below its recent high. So I think that's likely to continue. I mean, if gold rolls over a bit in the short term and retests the recent low, I'm sure miners will probably sell off a bit, but I don't sense there's going to be any real damage there. I mean, stepping back, we're still in a situation where gold is overbought. It needs to consolidate. It needs more time. But looking at the stocks, more money. I mean, even as you have some selling pressure in the sector, there's still more money that's coming into the sector. And I saw a chart where you had huge outflows in the gold ETFs, like in the last month or the last couple of weeks or something like that, which was really surprising because gold corrected 11% quite quickly, and my target was 15%. That's where you have really strong support. I don't know. Maybe it could go a little bit below the 11%, but for the most part, in these corrections in bull markets, the price damage is in all cases it tends to be done after the first month. So that's kind of where we are. But again, stepping back, looking at the assets in gold ETFs, that's come back a lot in the last couple of weeks. And a week ago, I was looking at the commitment of traders report, and quite a bit of money had already come out of gold from the speculators, the speculative traders, and even the managed money, which is a smaller subset of that. That's basically hedge funds. Their net position, as far as net longs, I think has decreased 40% since January. So these sentiment indicators, and then with respect to the stocks, if you look at these charts that I love, which are the ETF flows, where you're looking at the assets in gold ETFs and also gold mining ETFs divided by the assets in all stocks. I mean, those things have barely moved. I mean, they popped up a bit in the last couple of months, but during this correction, they've come back down. And even with that being said, again, you look at select stocks, they've barely corrected. Like they've really been. I mean, even GOEX, for example, which I think is a better ETF than GDXJ, because GDXJ has 5 or 7 companies that are just, multi-billion market caps. I mean, there's nothing junior about that. But if you look at GOEX, it's kind of similar to GDXJ if you remove the top 7 or 10 stocks. And that thing broke out last week and made a higher high, even as, here and now, gold is clearly still in a correction. So we're in a real sweet spot here, I think, for the minors and select juniors. The only issue I would say is, just these high quality names have just moved so much, and I don't want to say they're undervalued now, but they're not overvalued. And if there's any weakness in these things, the investors in the market are just pouncing on the weakness and any selling. So I don't see these stocks or the miners in general having a big pullback until they go much higher.
So, Jordan, just for clarification, in terms of the ETFs, you're seeing outflows in the gold stock ETFs, but the actual gold ETFs, those have still been experiencing strong inflows, haven't they? That's been the data that I've been seeing.
Yes, well, if you look at the gold ETFs, just the metal like GLD,
Yes.
OUNZ, those types of ETFs, maybe it was the last week or so. I think it was a week here where there were huge outflows, like almost record outflows. But if you're looking at the stocks, yes, I mean, money is probably coming in to those minor ETFs. But if you look at the minor ETFs, there's these charts that float around Twitter. The minor ETFs, the assets in those divided by the assets in all stocks, it's barely moved up. I mean, it moved up a little bit a couple months ago, and it's come back down this month. So in relative terms, you're not seeing that much capital flow out of stocks and into gold stocks yet.
Well, Jordan, let's also bring silver into the equation. You've written about it to your subscribers the last couple of days, and a lot of people on our show over the last 2 weeks have gotten very animated by silver. I find it interesting because silver had a big run in March just a couple months ago, and it seemed like nobody cared. There was a big run last year in October and September and October, and that got some traction. But it didn't seem like early in the year there was a lot of interest. Now silver's been channeling sideways, but for some reason the momentum is building, and there does seem to be more action pouring into the silver stock. So, what's your take on silver and the silver equities?
Similar to gold, we're seeing some silver stocks hold up really well. Even a few have made new highs, even as silver is correcting here and nowhere close to breaking 35. But that being said, silver has held up really, really well. Yeah, over the last 5 weeks or so, it's been consolidating from 32 to 34. And again, just the action in the stocks, the higher quality names. I mean, it's a very small sector, but the higher quality names has been very healthy. I think the key with silver is really $35 an ounce. If you look at monthly, quarterly charts, I believe silver's all-time quarterly high close was 37 bucks. If silver can make a quarterly close above 35, or even 35 and change, that would be the second highest quarterly close ever. 35 is also monthly resistance, so that's where we are. I don't know if silver's going to break 35 here in the next, month or 4 months or 6 months or 2 months. At this point, I don't know. Nobody does really. But when it breaks 35, it has very limited overhead resistance until 50. And so that's the key. Silver breaking above 35 could be similar to gold breaking above 2100. And just the overall action in the silver stocks, relative in nominal terms and relative to silver, is encouraging. It's similar to what we're seeing with respect to gold stocks relative to gold. More money is coming into the sector, and I just think it's a matter of time. Eventually, we're going to see silver break above 35, and even a whole lot more capital could come into the sector at that point. So it's, we're in a good situation. I'd like to see both metals correct more here for a couple months. Maybe they will in terms of time, or maybe not. But that's where we are. The risk now has been pulled forward of silver breaking above 35. And when you see silver break above 35, by the time that happens, the high quality names will almost, I think, be at a point where they're going to get a little expensive. And there's not, after some high quality names in silver, it's just mostly low quality. So it'll get speculative and interesting at that point. But that's where we are for silver.
I think it's pretty interesting right now. Silver always has kind of that lag behind gold, and it's very much what we saw happen in the gold sector. The good companies start to run, then some of that money start to filter down to the juniors. That's where we're at now. And silver, the good quality companies are running right now. We're even seeing more M&A. But Jordan, you look back a lot on history. You share a lot of analog charts. How does this process, which does seem like it's playing out textbook, gold moving, majors moving, money filtering down, now some of the juniors moving, now maybe silver starting to move, silver very close to breaking out, silver stocks, the better ones starting to move. How does this all play into what we've seen in history?
Well, for silver itself, relative to history, this move is actually on the weaker side right now. I'm looking at a couple of these analog charts I posted on Twitter and looking at the silver bull analog. We're kind of at the lower point of that. We were trading along the average until this year, basically. Now we're at the low end of that. Silver's performance after gold breaks to a new all-time high. Again, last year we were above the average. We were with it for a while. We've kind of fallen off in the last month or so. So silver itself, putting the stocks aside, has actually been lagging history. But a big reason for that, I think, is just the fact that normally what happens is, gold breaks out, gold moves, and then gold corrects, and then silver breaks out, outperforms gold, and then it's moving. And, I would have thought a year ago, maybe silver breaking above 26 or 28 would be that breakout move. But there's been too much resistance, too much supply from 26 to 35. And silver has it's spent a lot of time chewing through that. It's getting closer and closer. Maybe it has a base now at 32, 33. But for me, that means that it's probably going to be when silver takes out 35. Like that's probably going to be the catalyst for it to really outperform gold. So I would say with respect to history, it's lagging, but it's all good and fine because when silver breaks above 35, it's going to have a shot to really accelerate its performance from that point.
Well, Jordan, just to clarify, in the silver break above 35, silver did hit above 35 in October of last year, got up to 35.04 on a close. It did break above 35 in March, and it got up to a 35.08 close, but it even intraday went up to like 35.49. But they were very short-lived. When you say you want to see it break above 35 and hold, is it on a weekly or on a monthly that you think is more important, or is there something where you want to see multiple days strung together? Because we have seen silver get above it briefly, but it was smacked right back down again.
Yeah, it would have to be a weekly at this point. Daily doesn't do it unless you see it get to 37 in the middle of a week. It's got to be a weekly close above 35 at this point. I mean, the weekly, if you look at the weekly highest close, I guess there's one. Yeah, there's one at 34.93, it looks like. So yeah, it's got to take out 35 with a weekly close.
Okay. So look, this is still strong action. Is there any downside risk here, Jordan? We should always outline what levels, I guess, on the downside we should be aware of that maybe delays a breakout or even maybe changes this long-term trend.
Yeah, if it's doing a mini consolidation here. Again, I think I said earlier from 32 to 34. And if silver were to lose 32, it could potentially come down to 30. So I think that is probably the medium term downside risk, you could say. So if silver were to break below 32 with a daily close below 32.00. However, precious metals are notorious for making lots of false moves. So, perhaps you see it break below 32 and then everybody's like, "Oh crap, silver's broken down. It's going to go to 30 or 29." And then it goes down, it goes down the next day and then it just V bottoms at that point and fakes everybody out.
Yeah, always got to be prepared for that. And from a big picture standpoint, love to get you to weigh in on the long from 1980 to 2011 cup and handle that people are pointing to at the $49-50 area. Are we in a giant handle since 2011? And could it, if it breaks above 50, what would that extrapolate out to as far as targets from a cup and handle pattern that's that large?
Yeah, we're in a giant base. Yeah, I'll get to the targets in a second, but the cup and handle pattern in silver has actually failed. So this requires lots of nuanced thinking. When you look at gold, that was such a beautiful textbook cup and handle because gold only retraced 38%. The handle only retraced 38% of the cup. The cup, of course, in silver goes from $3 or $4 up to 50. What happened? It came all the way down to 15. So for silver, for the cup and handle to still be intact, it would have had to, I think maybe it's 32 or 33. It would have had to hold above that. So the cup silver, its potential cup and handle, this massive cup and handle, that was busted in 2013. So it's no longer in a cup and handle pattern. And that is why it's taking so long for it to get back to 50. I mean, it's at, 33 right now. It still has to get through 35. And that's taken years and years. Whereas with gold, that was relatively quick. So, but all that being said, that doesn't matter that the cup and handles failed because you have this super bullish base that's about 46 years long. And so when silver is able to break above 35, break above 37, and trend towards 50, you're setting up for an epic, a massive breakout. The second greatest breakout of all time, in my opinion, will occur when silver takes out 50. And I talked about this in my book. I was looking at some potential comparable breakouts, not perfect, but comparable breakouts like ones in oil and copper in the early to mid 2000s. And when that happened, after those breakouts, I mean, they had really strong moves in a short amount of time. So the measured upside target from this breaking out from this massive base could be as high as $96. And based on history, I think you could see that in roughly 15 months after the breakout. So silver is setting up beautifully when we step back and look at the bird's eye view. But I tend to think that you're going to see the stocks really discount this potential breakout when they're above 35, 37. Like I think when we see silver getting close to 40, it's in the low 40s. I think at that point you're really going to see the stocks on fire, just crushing silver. I think they're going to really anticipate silver breaking above 50 rather than it's a situation, well, we need to see silver get to 57 or 60 and then the stocks will do well. I think they're going to front run this move. And the reason for that is, well, number one, we're already seeing it right now where silver stocks are outperforming silver during this little correction. The second thing is if you go back to, I believe it was 2009 or 2010 actually, silver had this massive breakout through 20 and $22. And I remember the stocks were leading before that breakout. Like they First Majestic, Wheaton Precious, which was silver Wheaton at that point, they were just crushing it before silver broke out. So again, super bullish base in silver. It's going to explode when it breaks above 50. And I think the stocks are going to anticipate that move and really lead that move well before silver breaks 50.
Jordan, can we put a time frame on this bull market, how long it could last, how long you think it already has lasted? Because look, everyone can cherry pick times. We can all say that it's been going up for X amount of years and the breakout, well, that technically just happened in March of last year. The stocks, again, depending on what time you pick, what low you pick, have been moving for years, but the juniors maybe have only been moving for a couple months. So what does history tell you if we are setting up for historic breakouts, what sort of time frame could we be looking at?
Well, I think with respect to the secular move in precious metals, I think this is going to last into the mid 2030s. Now, if we look at gold breaking out against the 60/40, so we had those breakouts, I think, in 1930, and then the gold stocks ran for 7 years after that. We had the breakout in the very end of 2001 or early 2002, so that was almost 10 years at that point. So early 2000, yeah, so that was, 9.5, close to 10 years. And then I believe it was at the beginning of 72. So you had 8 years after the breakout at that point. However, if you look at the gold stocks, which basically were gold, they functioned as gold in the 1960s. It was 1965 when they broke out against the stock market, and then that ran for another 15 years. Could gold, which broke out against the 60/40 earlier this year, I mean, could that run for another 15 years? I don't know if I see that, but I do see it lasting for another decade. And that's just one chart. But if you look at there's numerous other charts in my book, and I've tweeted about where you look at, gold against the stock market or gold against a monetary base, gold against the Fed balance sheet. You look at all these things, they're basically coming off a secular low in the last few years. So all these things basically are telling us we're in a new secular bull market. It just started. It's probably going to last, another decade. I mean, I don't know. Maybe it lasts 12 years. Maybe it lasts 8 if we really skyrocket too fast. Maybe it lasts 9 or 11, somewhere around there. And if you look at the past two secular bull markets, you basically had a crash or a severe bear market in the middle. So in the mid 70s, you had that 45% decline in gold. 2008, you had the 30% decline in gold. So with respect to where we are here and now, my thinking is, and again, this is just rough thinking, nothing set in stone. This can definitely change. If we're going to last 10 years into the next decade, there will be a crash or a severe bear market at some point. So maybe that's 2029, 2028, 2030. And then that somewhere around there, you're probably going to get the crash or nasty bear market, which sets the stage for the last cyclical bull market to end it, similar to 76 to 80, '08 to 2011. So we're on the front side of that where we're still in the first leg higher. And is this move going to be like '01 to '07, or is it going to be like 71 to 74? I think we're tracking more with the 71 to 74 case. Then it's a question of like, do we get kind of like a mini bear market? Because '04, '05, you had a mini bear market where the stocks were down, I don't know, like 50%. Silver was down a lot. Gold bullish consolidated. But if we have some kind of mini bear market in the next year or two, that could set the stage for this cyclical bull market that we're in, potentially running more than another 2 or 3 years. But just to be conservative, I would say the cyclical bull where we are here and now, that should probably run for another, let's call it roughly 3 years. But the risk is these moves will be shorter if we go up in sharper fashion. So if gold really accelerates and goes vertical, silver goes vertical and gets to $100 in 2 years, something like that, then at that point it's a question of, are we setting up for the crash, or are we going to have a mini bear market, before we have another year or two in this first run higher? So I don't mean to confuse people, but that's how I'm looking at it. We're in a cyclical bull market right now, probably going to last another at least 2 years, probably 3 years, 4 or 5, maybe, yeah, again, maybe, but that's going to lead to, that 2008 74 to 75 moment that sets the stage for the final move higher. So that's where we are here and now. And I'm focused obviously on the first major leg higher, which is where we are here and now. And again, I see that lasting probably another 3 years. So I think we're in a real good position here to potentially make a lot of money in the next couple of years.
Okay, so a lot of nuance there, but overall, this is a very strong environment and continues to be a strong environment, especially with money now trickling a little bit more down into the juniors and still that potential of money trickling from the gold focused ETFs into more of the gold equity ETFs and also into silver. Again, Jordan Roy-Byrne is the editor of the Daily Gold. Click that link in the show notes to visit his website and also check out his YouTube channel. Jordan, great chatting with you. Thanks for the update today.
My pleasure. Thanks so much for having me.